Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host Joel L. Connon, along with Brianna Valesky. We have Bill Corcoran on the line. He's the CEO of Better Trades. Bill, how you doing on this Tuesday morning?
Doing absolutely awesome, Joe. How are you guys doing this morning?
Great to have you on the show. So, tell us what you like to trade.
So, Joe, as you guys know, been on the show before. I'm primarily a short-term technical options trader, focusing primarily in the options market. I also trade the FOREX and futures markets on a limited basis.
Okay. All right. So you like to diversify. I mean, is it particular times that you go to the Forex markets when there's a catalyst, or it's something you have a couple currencies you like to keep an eye on?
Primarily, I like to keep Forex as maybe a little bit more of a long-term trending position. We were short the euro from 141 almost down to the bottom there at 105. We got out at just a hair above 106. So it was a pretty good little ride there. Long-term trend is a core position held in the portfolio to keep us moving in a direction as we're working on some medium and longer-term options trades as well. As you know, the volatility in this market can be tough, and it's nice to have some long-term trending positions to keep you anchored, if you will.
As the CEO of a large stock market education company, are you still really active in actually teaching students about the markets?
I really am, Joe. I love getting out with the students. In fact, just came back from a great event that one of my co-instructors and I did. Marquet Latimer and I did an event out in Las Vegas. We had a great time. I'm out on the road at least 3 days a week, or 3 weeks a month, with folks for a couple days out of the week, working with our students. I actually came to Better Trades as a student. That's how I came into the company, and that's how I learned to trade the stock market. So my passion is really with the students, as it is with all of our instructors. We really have a passion for getting out there with the folks and teaching retail investors and traders some of the more advanced derivative strategies and ways to work the options market for leverage and to build that profit in trading that we all see.
Right, and with the markets, come different periods of low volatility, high volatility. How are you and the other instructors at Better Trading teaching students to handle this range-bound market?
It's interesting. You always hear some complaint about the market, right? I mean, you'll hear people say, oh, this is a tough market to trade. It's always a tough market to trade. I think the last easy market to trade that we had that people talk about was the tech bubble. And I know a lot of people who lost a lot of money in that environment as well. And so there's always a tough market to trade. We are obviously in a very range-bound market here. And as you guys well know, we're knocking on the door of breaking out here in the S&P. 2120 is an area in the SPX that we've been watching carefully. It's an area that acted as resistance repeatedly for several months. We had a short-term breakout that we could not hold. We broke down below it. And so, we're really at the precipice of either forming a head and shoulders pattern and potentially a short-term reversal or a breakout and moving higher. And what we focus on at Better Trades, and all the instructors do, is the key to trading short-term, especially as an options trader, is in technical analysis. Your ability to read the charts, to trade off of good, solid technical indicators is going to be everything. And at Better Trades, we focus on that technical analysis, and then we lay the option strategies over the top of that. So we focus on a lot of option strategies that let our students leverage and find positions that work for them in both range-bound markets like we've been seeing for months here in the S&P and the markets in general, but also in longer-term trending stocks. In fact, it's kind of interesting. I'm live with my morning trading group right now, and they're listening into this interview. And one of the students typed in, wanting to know if Goldman Sachs was going to be a stock that we would be starting to evaluate, given the very strong trend we've seen in financials. So, it's a range-bound market, but there's always opportunities to find stocks that are in trend, even in these range-bound markets. And we're really watching to see if this recent high, the 2134, 2138 range, gives way. We could see the continuation of a very strong bullish trend.
Okay, we'd like to say hello to your students that are listening in. Hopefully, they can join our chat as well. Are there any changes to your option strategies since the last time we spoke? The market a lot about is tweaking, making subtle changes. That was a couple months ago. Has there been any changes to your strategies? Any new tricks?
Joe, the one that we're really picking up on that we enjoy immensely and we're really having some success with is directional calendar spreads, where we're going in and taking, a long-term position on a trending stock with a call option. And I'm talking, a leap option 6 months to 2.5 years out, and picking up that leap and then selling call options against it. And we just absolutely crushed some of these in our paper trades, in our practice trades that we do for teaching purposes. And it's just been phenomenal. We've been bringing in some cases, 10% return per week against the long-dated option, and that's really where we're starting to structure that strategy. One of the amazing things about what I do at the Better Trades Morning Lab is that it's really a mastermind group, and the students have an opportunity to experiment, if you will, hence the name of the lab, with the strategies that we're using. And those calendar spreads have just been tremendous in trending stocks. Examples of stocks that we've been playing around with are Starbucks is a great example of a very inexpensive stock where we've been able to go out 6 months, buy a call option for about $3.50 and bring in between 30 and 40 cents per week off of those call options by timing the sale of those call options on retracements in the trend.
So you're not, are you doing like a spread, like a 50-55 spread, or are you just going out right there and just buying the calls?
So we're going out typically 6 months and buying one strike out of the money call option, because of the pricing of the option, and we've got enough time for the stock to move in the money. And then we're going in and either selling the horizontal or the diagonal calendar spread against that, bringing in a 10% against our original cost basis. So, and that's per week. It's a phenomenal opportunity to bring in, what we're calling massive passive income. I mean, it's just, we're making money on the front week for cash flow while we're gaining value in the underlying asset and managing the underlying, if you will, which is obviously the stock, but we're managing it through the use of a call option. So it's a calendar spread. It's similar to a covered call, but it's a calendar spread. And because we're spending so much less on the long-dated position, our rate of return is significantly higher.
You recently attended the Benzinga Fintech Awards ceremony. What were your thoughts and on the award program and your thoughts on the direction of financial technology?
That was one of the best events I think we could have attended. It was phenomenal to see some of the disruptive technologies that are coming out right now. Benzinga did a just tremendous job putting the event on. Everything was top shelf, and it was very, very well done. Great opportunity for us to get around some of the new upstart disruptors, if you will, in that industry.
Okay, and will all the new financial technology affect what you teach at Better Trades?
The FinTech Awards really opened our eyes to what's out there and new ways that we will have to bring financial data and execution to our students, and obviously opened our eyes to the possibility of providing our educational resources to those companies. Great companies, great startups, but there's got to be a way to teach people how to use those products, and it's really something that we're exploring and very excited about the opportunity to share our resources with those startup companies and help them to disrupt that entire industry.
Yeah, technology is always changing, and to implement it into your trading is always a good thing. Markets just open up here. We're trading up 5.5 points here. Could you just give us an idea what's on your radar for today?
Absolutely. So we're looking at a couple of interesting trades here. Obviously, the market trading up. Everybody's watching these areas around the 21.30, 21.35 range to see if we hold there. We're looking for some opportunities to potentially fade some stocks if they don't. One that we really took a look at and initiated a paper trading position yesterday on was GoPro, as GoPro has put in a lower high below the 200 moving average. and we really see some weakness in that trend. So we're looking to fade some trades to the downside. The energy sector, Apache, we've been in a long-term paper trade on put options there. We've been selling puts against that for weekly cash flow as well, and we're looking for that. Now, some breakout trades that were of note yesterday and seem to really be continuing today is Facebook. Great breakaway gap yesterday after a short retracement to the 10-moving average. Facebook looking like a very, very nice breakout move here this morning. We'll look for a breakout of the second 5-minute candlestick to initiate another position or add to our original position. Google, the L series of Google, they had a failed breakout yesterday, long wick at the top of the candlestick. So we're watching to see if there's some follow-through to that and if that actually becomes a retracement back to the moving averages there. So, we're always aware of both sides of the market and opportunities that may present themselves on either side. GoPro, big sell-off yesterday. We had a huge sell-off in that stock. And today we will look to actually hedge off some of that risk to capture and lock in some profits. And it's one of the things unique to the options world is that we can have a big profit like we did yesterday, lock that profit in by selling an out-of-the-money put, and then wait for the stock to retrace a little bit, buy that put back at a profit, and then let the original position run if the stock continues to go lower.
It seems that a lot of, it seems like you're legging into a lot of stuff there. Do you ever get caught where, that original leg doesn't go in your favor and you don't get a lead and you're not able to put on that other leg, or do you just take off the first leg, take your loss and move on?
Absolutely, Joe. We'll take a loss on a position, and in fact, we get stopped out on a lot of positions. But by taking that initial directional trade, we've been able to generate just astonishing rates of return and profit in some of our trades as a result of taking that initial directional trade and then hedging it if it goes in our favor. If it doesn't go in our favor, we'll just get out and look for another trade. And of course, any trader who tells you they've never gotten caught, by surprise by a trade is either not trading or lying to you. We've had some trades that have gapped against us, trades that have gone bad, but because as options traders, we understand the hedging techniques, we always have the ability to go in and create or generate a spread, either a debit spread or rolling into a credit spread and ultimately into maybe a condor or an iron butterfly. We've actually been able to take trades that have gapped badly against us and roll those into trades where we completely neutralize the loss through the use of options and creating spreads. So we're always looking to roll with what this market gives us. It's, it can be a little bit tough market to trade, and people always say that, but it's always a tough market. So we're always aware of the opportunities that options give us to trade things that work. We may have one side of the trade that's not working, but the other side, we've got it working in our favor.
Do you have any take on what's going on here in the health insurance sector? A lot of rumors about potential takeovers. Started out with Humana and Cigna and UNH, Aetna all getting involved. Is that when the fundamentals get murky like that? Is it something you just kind of shy away from, or do you try and pick out who the winner is going to be in these potential mergers?
We actually have talked quite a bit in my morning lab at Better Trades about the several of the different sectors, and healthcare is one that continually comes up. You're seeing this huge breakdown of Humana off of what was essentially these rumors of takeovers. Cigna, it was interesting. We actually talked about this, that the takeover rumors were not working the way they're supposed to, right? The idea is that the company that's being taken over gets sold at a premium. The company that's doing the buying, their stock goes down as they're spending the money to do it. And you're seeing both the stocks go up. And so there was a lot of red flags going on in that. At the same time, there's this catalyst that you just cannot ignore. For the first time in history, the American citizen is being required by law to purchase a private product. And when you have the government mandating a supply of customers to any industry, boy, I'll tell you, you better get on board with that. I mean, there's just, whatever the politics are, whatever you may believe on that, the truth of the matter is you have the government saying you have to have customers in this industry. That's a great industry to be in. And those are the kind of stocks that we look for some of these longer term trending type trades where we'll buy a call option and then sell weekly calls against it on these pullbacks. The sell off in Humana over the last few days has been stunning, and it's just been one of these things that has been so volatile, very tough to trade it because you had the big rally, and now we've broken down through the major moving averages. We're approaching the 200 moving average. We've broken down through the 50. Now the move likely from the 50 down to the 200 is a significant 30-point move. So there's some opportunity for technical traders here if they're really watching this, but the volatility has just been extraordinary.
Yeah, this one is almost coming back down to I believe it was on May 31st or June 1st when it had the news and it was halted. My partner Dennis and I were talking about that it was an area of consolidation here, and we were kind of joking about picking it up if it gets there. But boy, oh boy, sure looks like it's on its way in today's session. All right, Bill. Before we let you go, just any final tips or words of advice for traders and investors?
I mean, the macro picture, Joe, is a little bit scary. I know there's a lot going on, concerns about Greece, concerns about interest rates and whatnot. But if folks will stay focused on the charts, and what we teach at Better Trades is that charting component, stay focused on the charts. The chart tells us everything that we need to know. Fundamentals obviously drive stocks long term, but it is price activity in the market that's generated by traders and by the opinions of traders and investors that's going to decide what a stock is priced at. And we just got to stay focused on that technical short-term look to the chart and trade what we see, not what we think. And that really is the important thing. One of the mantras we have at bettertrades.com, is to trade what you see. Don't trade what you think. Go with what the charts are telling you. And be ready to manage risk whenever it's necessary.
Bill Corcoran, CEO of Better Trades, joining us on here on Benzinga's pre-market prep. Bill, thanks a lot. Great words of advice. We'll keep an eye on some of the stocks that you mentioned, and we hope to have you on again soon.
I appreciate it. You guys take care. Have a great trading day.